Hi guys, and welcome to our weekly overview of the markets. I'm one of the coaches of Unga Academy, and as usual, before we start, I invite you to please subscribe to our channel if you haven't done it yet. And of course, as always, click that notification bell to get updated on all our new content. Okay, so this week, a lot of things have happened on the markets, especially on stock indexes. In fact, on Monday, mini S&P, the US stock indexes, and the European stock markets went down quite a bit due to the situation of Evergrande, the Chinese super real estate group that seems to be close to default. This has obviously fueled fears of a systematic crisis that made stock indexes all over the world enter a bearish phase. However, as you can see, these markets have already recovered and they are now more or less on the same levels as last Monday. Of course, this did lead to an increase in volatility, as we can clearly see from the short-term standard deviation. Nevertheless, long-term volatility is still fairly normal, with values that stay below or around the 50th percentile. Bonds are also negative, as you can see. They're still within the trading range they have been in over the last few months. However, they are dangerously in the very lower part of this range. Energy markets, on the other hand, moved in a mixed way. The one that probably performed best is crude oil, which is now getting closer to its historical high. Metals continue to be weak. In fact, as you can see, they've been producing negative returns for 3 months now. Silver, in particular, went through a very strong downtrend. Meats are also going through a weak phase. They're showing a lack of directionality and mixed returns. In particular, over the past year and the last 3 months, the returns were particularly negative. Soft commodities produced mixed results, and cereals didn't move in an interesting way at all. So no noteworthy ideas here. What was certainly more interesting is the cryptocurrency industry. Now, this is the chart of Bitcoin, which, as you can see, is now getting close to an important support level. This is due to the violent fall that occurred on Friday, which was triggered by the release by the Chinese government of a detailed document on the prohibition of mining. And Bitcoin wasn't the only market that paid for this document. Actually, the whole cryptocurrency market experienced a significant fall. On Friday, for example, some smaller cryptocurrencies lost over 30%. Now let's take a look at implied volatility. And here's the term structure of the volatility indexes on the SPX. Last week, we've seen that volatility was rising. And on Monday, a further rise occurred. But now, as you can see, it's going down. So the situation seems to be completely, absolutely under control at the moment. VIX is within the range of the last 3 to 4 months, and the term structure doesn't currently seem to be a cause of concern. Now let's move on to rollovers. As you can see, there are no rollovers planned for next week. I'd just like to remind you that the last ones we did were on energy futures, VIX, and Bitcoin. And that, guys, is it for this week. If you want to understand more about what we do at Unga Academy and how we develop our trading systems following the method of the only 4-time world trading champion Andrea Unga, I invite you to please go and check out our webinar. You can find the link in the description of this video. And if you haven't done it yet, go and subscribe to our channel, please, and click on that bell to stay updated on our new content. Bye-bye to everyone, and we'll see you next time.